Good morning. I'm Steve Wolf, Wholesale Marketing Associate at Sprague.
And I'm Joel Williams, Director of Refined Product Sales here at Sprague.
Welcome to Sprague's Refined Products Review, where we discuss what's moving the market and the insights we see every day. Well, Joel, another down week last week. Where do we sit today?
We sit today at sort of the end of the ceasefire, and if we look back 2 weeks ago to the 7th of April, when the ceasefire started, product was trading in the futures market for around 450. We're down to 360 as we speak right now on Tuesday, which is down about 90 cents. In that same time frame, we've seen the Dow Jones go up over 3,000 points. So that's the market really telling us that a ceasefire and a diplomatic solution is what is really wanted here. And I think on the other side, you see the Trump administration also would appear to really want a diplomatic solution. I mean, this one of the cornerstones for having this ceasefire was that the strait was going to open for free, flow of goods, and that never really happened. Yet the ceasefire has persisted, and by most people's math, 2 weeks would be over today. But it sounds like we're getting a reprieve for another day till tomorrow for these talks to continue. All signs point to the fact that we really would like to see a diplomatic solution coming out of this, both from the U.S. and from the market.
So, if the government and the markets both want an end to the war, why are we staring at a possible restart?
It really comes all down to the Iranians at this point. It would appear that they're not willing to give on a few of the major factors here. I mean, clearly coming into the war, the whole goal of this war was really two major outcomes. One was to end the Iranian nuclear ambitions and their program going forward, and the other one was to end their funding and support of terror proxies in the regions. And so Iran does not seem to be willing to give up aspirations when it comes to both of those, as well as there's been a bunch of other things that have arisen since the beginning of the war, in terms of who controls the strait, reparations for the war, things like that. So the reason we're not seeing a solution, quite honestly, is that, the two sides are too far apart. The U.S. has a very, strict line in the sand of where it's willing to be, and Iran has one, and they're just not very close to each other right now.
So, if Iran is not willing to budge, what hope do we have left for a diplomatic solution?
Yeah, I mean, it really comes down to when you're in negotiations, there's really two different ways that it can end. I mean, one, the U.S. could bend and change its line in the sand and move closer to where we can get to a possible solution. And the other would be Iran could, and it would seem like that would take some type of force to get them to move their line in the sand a little bit closer. There's really two ways to pressure someone in negotiation. One is through words, and the other is through actions. So far the actions have been the blockade. And the blockade, which we've talked about before, is really focused on cutting off the financial resources that Iran has, and that if you can spend long enough time cutting off their money, that will come back, and you could create a lot of pressure that way. The other way during the ceasefire to kind of create, leverage is through words. I mean, we've all seen the social media tweets coming out of our president and the rhetoric coming out of this administration, obviously calling for, potentially catastrophic, scenario that is a major threat hanging there. So, again, there's hopes that those sort of financial actions and those words can get that, Iran to move that line in the sand a little bit. But if it doesn't, then the question becomes really how far is this administration willing to take it, in terms of their threats? How much are they willing to back up? And once they start to implement that, how long does it take, and how far does the U.S. have to go to get Iran, again, to move their line in the sand, if they're willing to do so at all?
Well, I guess we're still in the wait and see period, with a lot more potential for headlines this week.
Yeah, there sure are a lot of potential headlines coming up in the next week or so.
So let's bring this back to the Northeast. What are we seeing here?
Yeah, I mean, I'll give you some stats here. I mean, the first thing before we get to the Northeast, let's start with the world. It's estimated that over 1 billion barrels of oil have been lost since the beginning of this war. World inventories are at an 8-year low right now. And if the strait remains closed, that billion, barrels could double or even triple. So, the impact is very real. Then bringing it back from the world to the U.S., I mean, we look at last week's DOE report, and it was one of the first times I've looked at the DOE report and seen all red numbers, big red numbers all throughout it. I mean, when you look at the inventory declines last week, crude declined, gasoline declined, distillates declined, jet fuel declined, the SPR levels are lower, our imports were all down. And you just don't see that often. And then when you look at the other side, I mean, exports are up in basically every category. The U.S. exported crude last week, exported gasoline, exported distillates. So when you overall see inventories down, imports down, exports up, that's saying that basically the world needs our oil right now. It needs the products and the oil coming out of the U.S. And the companies that are producing that oil and have those products are getting paid a great price to do it. And they're happy to send it an ocean away to receive the premium that they can get for it. And then, your question was more on the Northeast. So bringing this back to the Northeast, I mean, what we're seeing is that inventories also went down in the Northeast in Pad 1. We're continuing to see the cargoes. They're going to Europe on a constant basis right now. The market's still 20 cents backwardated. So obviously, holding inventory is incredibly punishing, particularly in the short term here. The financial pressures that we're seeing from the market, they're really just causing, suppliers like us to hold as little inventory as humanly possible. We're seeing suppliers in some markets even empty their tanks and get out of the market because it's just, too confusing how to navigate this situation. So, we've also seen pipelines randomly are not going on, in time right now. Normally pipelines, you get enough oil to feed up, but people are so afraid of holding inventories that they're not even taking deliveries off the pipeline. And when you only have a couple people who want deliveries, the pipeline needs a certain amount of oil just to flow through it. So really, we're just seeing all kinds of signs of the supply crunch that's really hitting us right now.
So overall, that sounds pretty scary. What advice do you have?
Yeah, I mean, it is. The market, it's in a territory that we've never seen before. There really isn't a playbook that we have for this right now. Companies are going to need to adapt and come up with new strategies for how to deal with this market we're seeing. Again, this supply crunch and this incident as big as the last three. This is the Russia war, the 70s oil issues. These are all of them combined into one. The costs are through the roof. So, prices are continue to stay high and diffs are going to continue to have to stretch to cover all those costs. So really, any business that isn't catching up is going to find out real soon how hard this can hit, and they're going to have a hard time staying in business. So it's right now, it's all about finding, a supplier that you can trust. It's about keeping communication open with them. Work with somebody that you believe has the foresight in this market to navigate it the correct way, to both survive on their own financially, but to also be able to continue to support your needs. Outside of that, it's really just, it's a long game here. Play the long game. Watch out for the short game opportunities because this really, this amount of oil missing for this long is going to be a long problem here. And like we say every week, buy what you can sell what you can buy. Don't get caught on the wrong side of this. We're going to see a lot of headlines again coming out in the next week or so. So, let's see where we are and we'll review this again next week.
Well, thanks so much for joining me today, Joel.
Thank you very much for having me, Steve.
And be sure to mark your calendars for our next special feature, releasing Friday, May 1st, an interview with our chairman, Dave Glendon.
Well, that's all we have for you this week. Thanks for joining us. We'll see you next Wednesday for another Refined Product Review. Refine your insight.
Fuel your success. And be sure to mark your calendars for our next special feature, an overview and interview.